Hi, this is Julie Waldorf, juliewaldorf.com, and I have Eric Osborn here with Osborn Insurance. And Eric, I'm totally confused. This Obamacare, I don't get it. Could you give me a clue how I even get the insurance, what it'll cost me? Just give me a clue, the rules on this.
You got it. So what you're going to want to do is go to Covered California, it's coveredca.com, plug in some information to see if you're able to get a subsidy or a tax credit, so that the government can help you pay for your health premiums.
Okay, but what actually is it? I don't even get. So if I have no health insurance and I want to get health insurance, I give you a call and say, hey, I know I have to be legal. So how do I go about getting this insurance? I mean, I call you, go to this website. What are the rules on it?
So I'm a agent that will be able to be certified to help you, to assist you for free.
Okay.
And you won't have to pay any more by me helping you and assisting you.
Okay.
We're going to need a few different things.
Okay.
We're going to need your age.
Okay.
How many people are in your household?
Okay.
Your annual adjusted gross income.
Okay.
Or if you're a sole proprietor,
okay,
we're going to need your net income.
Okay.
And that's it.
And that's it. So, okay, so I give you this information, then you'll tell me the amount that I would have to pay.
And I will tell you the amount you'll have to pay and the options that you will have.
Okay, it doesn't cost me any more money going through you?
It does not.
Okay, and so, is it good? What do you think of that Obamacare in general?
You know what? I think it's great. I'm going to put the positive spin on it.
Okay, what's the positive spin on it?
The positive spin is this, is that for a certain demographic of people financially, making between 100 and 400% of the federal poverty level.
Okay.
So, for example, a family of four that makes under $94,000 a year will get some sort of subsidy.
Okay. So insurance will be cheaper for them.
So it'll be cheaper for them, and they'll have a great plan. This plan's with zero deductible.
Okay.
A PPO plan.
And pharmaceuticals are covered.
Pharmaceuticals are covered, office visits.
Okay.
80/20 plans.
Okay.
And also, what's exciting about this, most importantly, pre-existing conditions don't matter anymore.
Which is great, because a lot of times you can't even get insurance if you have a pre-existing.
30% of my clients cannot get it because they have some sort of pre-existing condition, which you would think is not a big deal. But to the insurance companies it is, and no more January 1st.
So the majority,
76 days.
So what you're saying is the majority of the people will be helped with this program.
The majority of people will. Some will have to pay a little bit more if they make more money.
But they can afford it.
That's right.
Because if you're making, what is more? So you're 100,000 and you're one person or two people.
Yes, you can
then
pay
your
the full
insurance will
price.
go.
There'll be many options for people.
So give me an idea. Say if I am, it's a couple of 60 years old, okay, and they make $45,000 a year.
Yep. So they will only have to pay between $100 and $200 a month for a zero deductible PPO plan.
Yeah.
Pretty phenomenal.
Yeah, it is phenomenal. All right, well, thank you. So what's the negative? What's the negative? What's so negative about this program?
Well, the negative is, there's a few of them, but the one main thing is that people that cannot afford it will have to pay more. And that's what most people are upset about.
Because people who can afford it can pay more.
But those that are paying a certain amount now will be paying a lot more.
Okay.
Even though they may be able to afford it, they're going to be paying a lot more.
How much is a lot more, though?
I would say 30 to 40%.
30 to 40% more?
Yes. Especially the younger people.
Well, what's the majority of the population on that? Do you know?
I do not know.
You don't know? So I can see the dilemma. I actually can see that dilemma.
Yeah.
So the people who, it's all back to, the people who are making the money are supplementing the people who aren't making the money.
That's correct.
So the people with children will be covered.
That's true, depending, everyone will be covered.
Right, right. Well, say for example, I say, forget it. I'm not doing this. I'm healthy as a horse, and I'll pay the penalty. What's the penalty?
All right. The penalty the first year is $95 or 1% of your income.
Or whichever is higher or whichever is lower? Or whichever higher. Turkey. Right. Okay, so then the second year?
Second year is $235 or 2%, whichever is higher.
Oh, so it keeps going up. So what about third year and I'm healthy as a horse still?
$695 or 2.5% of your adjusted gross income.
Really? So it gives you a choice. The penalty is it could be cheaper than what your health insurance is, and then if you have to get health insurance, it's going to cost you the same anyway.
If you don't enroll by March 31st, 2014, you will have to pay a penalty if you do not get insurance, and you will not be able to get insurance until the following October 15, 2014, because that is what is the open enrollment period. And so if you try to get it on April 1st, you will not be able to. So
really,
if you get hurt or sick, you're going to have to pay those bills.
Wow, so they made it complicated and they put you up against the wall on it.
They did.
You sign up or you're out.
That's right.
For a period of time, and you better be healthy, otherwise it's gonna cost you even more.
That's right, so sign up.
Okay, and how do we contact you to sign up?
805-769-8790 or you can reach me at www.osbornagency.com. No E on the Osborn, OSBORNAGENCY.com.
Well, thank you so kindly for explaining the Obamacare.
Thank you.
Have a great day. Julie Waldorf, juliewaldorf.com. Ciao, ciao.